Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, but in our KYC segment, I would like to give you some hints. Which are the hints which will determine what's the company's name? The first one is it's a proxy play to the modernization of Indian Railways. That's pretty much interesting. It's of course a private player. It's backed by ace investors like Ashish Kacholia and Mukul Agarwal. Recently there was a pref issue where SageOne also participated. And the third hint is it won a Green Hydrogen Locomotive award from NTPC, and that's a very futuristic award, and that's one of the reasons why we will be focusing on the stock. The stock is up 120% in last 6 months. So these are the key hints for the company in KYC today. But let me give you the company's name, what it is. And the company's name is, of course, it's a hint that the airlines which was there in 70s, which was going and breaking the speed of sound, and the company, of course, is Concord Control Systems. This is the company which we'll be talking about. But the query is, why are we calling this company right now? What's so special about it? First one is they have started getting some large orders from NTPC, but it's on a futuristic perspective. It's on the hydrogen segment. A normal locomotive is there. Now how they are converting it into hydrogen, that will be very much interesting. A little bit technical, but definitely we will be asking the management about this. The order book inquiries and which segment are showing a good demand. That's the second query which we have raised. And the third one, why we are calling Concord Control in KYC show. This also includes your budget expectations for the company and the industry as a whole. There's just a caveat. We are not discussing numbers here with the management because it's in the silent period and we respect that, what SEBI suggests. And these are the key reasons, why we are calling the company. Remember the KAVACH 4.0 orders and the entry in the metro segment. This is something new. In H1 FY26 we have seen. So what is incremental on that? That will definitely ask the management. And of course on the show we'll have Gaurav Lath. He's the joint managing director for this company, where we'll be posting a lot of queries which Gaurav will be answering. But let's understand a little bit more about the company, what this company is all about. I had given you a hint, and that was it's a proxy play to Indian Railways modernization sector, but the company makes railway solutions and technology for the Indian Railways and the ecosystem as a whole. This of course includes the metro segment as well. And this is the something which I had given you the hint as well. Moving on, apart from this, company specific details is also very much important. Let's focus on them. And the third important company would be that it has entered into the metro business. This is a new area and we will understand from Gaurav what other plans are there. Also, 3 manufacturing facilities are there. This includes Lucknow, Bangalore and Hyderabad. Of course, expansion is definitely going on. So we'll be looking at that. Apart from that, they are an approved vendor, and this is from large players for the Research, Design and Standards Organization, which is called RDSO. Also, they are approved vendors for other 2 important segments. This includes Chittaranjan Loco Works, and also the third one is of course the integrated coach factory. This is one of the largest players. So yes, they have got the designations, they have got the approved vendor list as well, but we are looking at something more in the company when we decide this overall KYC setup about the company. It's around 313 crore worth of order book as of September 2025. But remember, Q3 had some strong numbers as well. Key clients, very big names here, includes LT and Alstom. That's pretty interesting. A lot of metro rakes are being made by Alstom as well. Key clients from the private space, ABB, Siemens and KEC and Tata Projects are the companies which company has. The recent achievements, they have recently secured their first KAVACH 4.0 order. That is very much important, and they acquired 80% stake in the Fusion Electrics as well. So that is something which we'll be watching out for, and they've developed India's first 100% indigenous zero emission propulsion systems. Focusing on Ashish Kacholia, he holds around 1.21% stake in the company. So that's pretty much it when it comes to the key shareholders. But order wins is something which you're talking about. 3100 HP Green Hydrogen Hybrid Locomotive has come in for almost 47 odd crore rupees. The second order win is the propulsion system. That's roughly 13 odd crore, and another order, it's 2 orders which have been combined. Let's just show that, and that's around 196 odd crore rupees for the locomotive wireless controls. So the third quarter net you can say that 200 crore plus addition has happened. To put in perspective, roughly 600 crore of order book is there. Of course, the company will be announcing that in the Q3 update as well. But the green hydrogen is something which has taken my interest. For the first time, they're actually converting diesel hydrogen power locomotives. It's a very futuristic concept, to be honest, and the diesel locomotives converted is at 3100 horsepower. Now compare that with the global numbers. As per management, that is just 1600. So that'll be very much interesting to see, high powered diesel engines are having hybrid energy setups, and that is why it took my interest actually to call this company as well. So what's so new about it? That is something which you'll be watching out for. So this is the total importance which is coming in from the green hydrogen segment. But let me explain you importantly what are the key ratings which we follow when it comes to a company, and there are 8 ratings which we follow in the KYC segment. This includes income statement, balance sheet, cash flow, return ratio, and also the street cred, which is nothing but the stock price movement coming in, shareholding between institutions, HNIs, valuation amongst peers, and most importantly the outlook. How does the outlook go ahead for the future? So these are the important parameters which you will be looking out for. The first one is the income statement. Of course, we have pulled in the numbers till H1, but the CAGR, the year CAGR numbers we have taken over the last 2 years, it's around 59 odd percent. That's also doing a decent work. And also you're looking at the operational numbers, that has been very significant as well. And income statement, largely the numbers are looking strong, and that's why there is a conviction to it. Of course, the company will be coming out with its numbers, Q3 numbers, in some time, and it's a silent period, so we cannot discuss the Q3 numbers as such. But largely, till now, the income statement, the story has been strong. That's what the numbers are saying, and that's why I've given a strong thumbs up when it comes to the income statement. The second one is, of course, your balance sheet. Looking at that, and let's just show the balance sheet, how much the movement is happening. And of course we see, okay, there's a cash flow there. We'll get into balance sheet in some time. The operational and the cash flows, that is where there's a lot of issue happening, and that's what we have seen in the numbers. And if cash flows don't come up, because these type of business models do have B2G risks as well on the payments front, that is something which I'll talk about more. But right now it is a thumbs down when it comes to the cash flow. But let's see how the balance sheet actually works out. And let's just see the balance sheet. The numbers are largely stable as per my analysis, and you see the borrowing that has come up, that's around 18 odd crore rupees. Looks like a working capital entry, nothing much to be concerned about. Cash bank balance is on the higher side as well. It's roughly 25 crore rupees. There's nothing great about the balance sheet. It's very decent, so the allocation is nice. So I've given this a neutral rating when it comes to the balance sheet. Also, after balance sheet, return ratios come in, and my concern is that ROC numbers are dipping. Is this because of the business numbers? And same thing goes for the ROE numbers as well. If you could just show that as well. Both sides, the return ratios have halved. Why that has happened? Is there any reason to it? That is something which will be a cause of concern, but management most likely won't answer these questions because they are on a silent period. But definitely it's something as a concern if you are an investor. For right now, return ratios, I'm giving a thumbs down. Also, apart from this, let's talk about the shareholding, how important this is. You must be wondering why FIs are actually, they have showing no exposure. So that's a concern, and that's why I've put in here. Because the company itself is having a decent market capitalization of 2,000 crore or plus. So slowly FIs and DIs start taking position. So earlier, HNIs take position. That's why like star investors like Mukul Agarwal, Ashish Kacholia, they have entered early. So that's where the smart money comes in. But right now also, it's very much under-owned when it comes to the institutional participation. For DIs also, it is just 2%, and now that has also vanished. Now the concern for me, what happens is the public. That retail stake, that has been going up from 28%, 33%, and it's maintaining at 33%. So there is a distribution happening in the market. More retail folios are going up as well. Promoters have also actually slightly reduced stakes. So the money is of course going into the HNI segment. There might be some float issues also, but net, it's nothing great, to be honest, because more institutions we need to see here as well. It's just not the HNIs who want to add their stake in the company. But yes, it's on the smaller side. So I've given this a neutral rating when it comes to the shareholding pattern. Also, apart from the shareholding pattern, let's see how street cred has been there. The stock has been a multi-bagger, to be honest, and each time frame which I checked, they have done really well. 1 month the stock is up 10%, but remember, a little bit of profit booking is definitely happening. 6 months stock is up 122%. 1 year, 141%, and if you take the entire perspective of 5 years, look at the number 7230. That's the strength, coming in the stock. But the stock has really done well. The question is there a pause here? So overall, street cred, of course, I will be giving a strong thumbs up. But valuations, because the stock has so run up, the attractiveness of the stock, that's a question mark as well. Until unless, of course, the company comes out with a very strong set of earnings and the P numbers come down, but it's at around 84 times the 12-month trailing P if you talk about Concord. And they have a competitor, not apple to apple comparison, but yes, definitely in the same industry, that's 64 times. It's a Hind Rectifiers which is there. That's where we are comparing both of them. So the valuations are not very attractive. So I have given this a thumbs down when it comes to the valuations. But apart from valuations from the peers, let's talk about outlook, how things pan out. And I have mentioned earlier, the company is having a good exposure to the government. And because of that, there's the B2G risks come in. And when B2G risks come in, then the cash flow payment cycle, that's also a big question mark comes in. And that's what we saw in the return ratios and the cash flow segment, where I had given 2 thumbs down to both of these parameters. The H2 order flows, that's expected to be stronger than H1, and that's true, that's correct. We have seen that in Q3, a very strong lumpiness of orders coming in. They want to maintain the EBITDA margins in the range of 22 to 25%. So that's also pretty much decent. But we want to see that in the return ratios and cash flows also. That's what the investors have written to me about this stock. Revenue growth 40 to 50% CAGR for the next 3 to 5 years. Will the management keep that guidance or not? That we'll understand as the Q3 earnings start progressing. And overall, a business opportunity of almost 47,450 crore rupees coming till FY30. That means for the next 6 years, that's the amount you're looking at for the opportunity. So let's see how the numbers actually pan out. Right now for outlook, it's a neutral rating. Income statement very strong, but cash flows and return ratios, that is where my concern comes in. And going ahead, let's see what else happens. Street cred, that is a very strong returns. It has been a multi-bagger. People have rode the stock. So congratulations if you're holding the stock. But is it the right time to enter right now or not? That's a question mark. Why? Valuations are on the higher side. Outlook is also good, but there's always a B2G risk involved. There's a lack of institutional participation also. So net, on a cautiously optimistic approach, I have given this a 3.5 out of 8 in our KYC show. So that is how we talk about the entire KYC show. And now joining us would be Gaurav Lath, and he's the joint MD of Concord Control Systems, but he's wearing a lot of hats apart from being a joint MD at Concord. He's also associated with the company for more than 15 years. He's the MD at tankupingenieursindia.com. That'll be pretty much interesting as well. And education all across, be it Harvard, Oxford, and even NMIMS, which is an Indian company. Also, Gaurav, hi, good afternoon to you. Very nice talking to you here. And season's greeting to you as well. A very important order, because generally when we talk about locomotives, train ki engine, we never talk about hydrogen. What is this all about? That was something which was very intriguing for me when I was analyzing your company.
Me on this show today.
Yeah, Gaurav, could you unmute please? Yeah.
Can you hear me?
Yes, Gaurav, please continue.
Yeah. Thank you, Sharad, for having me today on this show, and thank you for talking about Concord. So just talking about the hydrogen locomotive development. So today Concord is going to build world's most powerful hydrogen-powered locomotive propulsion system, which is not a concept but a fully commercial scale solution which we will be developing. And in India, this is special because India has scale, engineering capability, as well as it has the availability of green hydrogen. So we feel that this is going to be a real game-changing opportunity for the railways ecosystem in India, as well as for Concord.
Gaurav, it's a very, very tough industry to be in, be it the railways industry, because railway industries, a lot of backlogs are there. And there's a new thing coming from the government on the modernization front. And of course, there's a lot of push or a pressure coming into a lot of private players to start and increase this modernization work. Does it get very overwhelming on this order front? Because in Q3 I've seen a lot of orders coming in one shot. Till September it was roughly 300 odd crore, 315. But now I'm seeing 250 crore of orders came in Q3. So you can expect these inquiries in Q4 also, because you had mentioned H2 will be better than H1.
So what's interesting is that India is executing faster than many developed markets. And the policy is aligned, the manufacturing capability exists in India, and the projects are moving faster than paper on the ground. So this creates a rare window where Indian companies can lead globally. And Concord is evolving from a component level supplier to more of a platform level propulsion technology partner. And with this, I think many more opportunities will open up for us as a company, and we see a growth potential which is going to be significant for us.
And Gaurav, let's put that perspective in the budget expectations, because railways is indirectly a very important part of the budget. A separate budget also comes in for our young viewers who are understanding this concept. I'd just like to ask Gaurav, what are the expectations from the industry? And I know some good positive announcements is expected to come in. That's what the street buzz is. But regarding your industry, in terms of modernization, what kind of expectations you are having for the railway segment? And also you add in the metro also, since you are also in this segment now.
Sarath, so for any industry, what matters most is continuity. And today we can see that the public-private collaboration on the overall policy visibility as well as continuity of that policy is very overwhelming in the country, and we all appreciate the hard work which is being put by the leadership of the country. And this will certainly support any new innovative developments, green hydrogen infrastructures, as well as the entire support towards technology validation, certification, and everything which is first of its kind in terms of innovation in India is being supported at the highest level. So we feel that this budget will also revolve around safety, security, innovation in this entire ecosystem, and this will always be favorable for industry partners who are working closely with on a public-private collaboration with the government.
Gaurav, my question is KAVACH 4.2. I think from H1 FY26 the orders started coming in, and there is a research development element to it also. So I want to answer both the queries for our stakeholders and our viewers at NDTV Profit, that what is actually the company doing in the KAVACH segment? Is it the R&D part also, or the order flows also expected to increase now?
Oh yes, we are a company which is developing the KAVACH 4.0 as a completely indigenized, in-house developed product. We have been investing on this for past 3-4 years on a very large scale, and we take pride in the fact that the entire technology has been designed and developed in-house. This gives us flexibility as well as cost optimized product offering. And government today is really focused on increasing the safety of the track and the safety of passenger travel in the country. And KAVACH happens to be one of the largest deployment to ensure that there is no collision on the track. So yes, we are part of this opportunity. We take pride in this fact. And we hope that more and more players will get the opportunity to work in this space, and the order book is definitely going to increase in times to come.
That's correct on that, Gaurav. But just as an industry perspective, I don't want to get into the financials of it since it's a silent period. I don't want to get into it. But to put in perspective, at times there is a delay in the payments which happens industry specific from the railways. So there is a B2G risk involved as well. You as an industry player, when these issues happen, what kind of mitigation strategies do you take place? How do you hedge yourself? Because B2G risk is definitely there.
So Sarath, again, government, rather railways as a whole is working very hard in improving the payment cycles, and today I would say that the payments overall cycle has improved a lot. And from Concord's perspective, I think we are well diversified into various segments within the railway ecosystem where we feel that we will grow substantially without any cyclic nature of a B2G business. And we are well hedged there,
All right. So,
improving our
yeah.
top line as well as margin expansion both, ensuring a very strong and a steady bottom line.
All right. Just to put that in perspective for our viewers also, I'd just like to add in one important thing. That is that the company has maintained an EBITDA margins in the range of 22 to 25% and the revenue growth 40 to 50% CAGR for next 3 to 5 years. I'm not going to ask you on the guidance because that's the suspense for our audience for the Q3 numbers. But I'd definitely like to ask the metro segment. That's also where you have done an entry because KAVACH is something which was new. Okay. Metro segment. Is it a bit different than the railways business as a whole, because railways you have a big history, but metro is also coming in. I think Alstom is also your client. So how do you view this segment?
The metro is a very large ecosystem, and today India has one of the largest metro networks across the country, across the world. In fact, there are the number of projects around metro which are being happening in the country simultaneously is the largest across the globe. And we take pride in the fact that now we are developing products with the help of a German partner. We've got the technology under a TOT, under Make in India. And with this initiative, we will be improving the overall asset life through preventive maintenance and AI tools for the overhead asset which is deployed on a metro system. And we feel that this is going to help each and every metro system in improving their preventive maintenance with the help of AI and technology. And at the same time, it will also open up new opportunities for Concord because India happens to be the largest metro network, and there is a large market demand which we foresee in this space as well.
Well, that's true. Now, if our viewers are hearing from Indore, Hyderabad, Kolkata, you must agree with me that I've seen a lot of metro projects coming up, and definitely there is a key beneficiary being Concord as well. But Gaurav, apart from this, there are a lot of JVs and tie-ups which you do. I'm not going to ask that any new JV or tie-up is coming out because existing JVs are also so much for the investors to actually digest. This is, of course, an 80% stake acquisition in Fusion Electronics. So this acquisition itself, when are the synergies starting to come? Because I think there are 2-3 important investments you have made in your different arms, which are also doing different work. One is an R&D arm as well. But I am interested in Fusion Electronics. A lot of viewers have written to us in KYC also that what happens next with your acquisition, what benefits come and by when?
So I think inorganic growth through acquisitions and acquiring more technologies has been a very strong part of our DNA at Concord. And in the past 3 years, we have been able to create successful turnarounds. In fact, we have built in a small center of excellence around acquisitions and turnaround within the company, which helps us turn around a company in a batch of 100 days. So 3 cycles of 100 days is what we give to our team. And we do the culture setting, goal setting, and turn around a company. And we feel the recent acquisition of Fusion Electronics, which is country's largest installed capacity of flexible printed circuit boards as well as electronics. So EMS as a play for India as well as, so this will help us position Concord as an exclusive railway EMS company, with opportunities of box building solutions not for only the Indian market but also for global railway requirements. And this will certainly help us in adding to the revenues. At full capacity, we see about 200 crores plus of revenue coming in, and an opportunity to almost double that in the next 3 years. From
200 crore revenue opportunity from Fusion, and then that doubles up in the next 3 to 4 years. That's a 400 crore number. That's a very important statement coming in. But thanks a lot, Gaurav, for coming out and during this silent period also and talking about your company. Best of luck for the future and a happy 2026 to the entire Concord Control Systems. Thank you. Well, that's pretty interesting. That's the management of Concord Control. A lot of orders are coming in, and financials also we'll be watching out for, especially the Q3 numbers which will be coming. But that's all, folks, for KYC. Stay tuned to NDTV Profit.